Good morning, my fellow traders. Good evening, good night, or good afternoon if you are watching my video, depends on what time you're watching. Now, I highly recommend you guys to watch this first part of this video. It's going to be really educational. I'm going to show you the trades I've taken and how 2 or 3 trades, including NATGAS trade, that played out with my emotion, and I want to show you the trade that I've shown last week, which I've set, and I've shown you guys that I'm still in this trade, and let's see how it goes next week. So this week came, and I want to show you the results of those trades as well. How I managed my trades, how I do my risk management, why I've entered those trades, and why I've skipped some trades and informed my members not to take this trade as it's going to be risky. So it's very, very educational. And trust me guys, you will enjoy it and you will learn lots of knowledge. In the second part, we're going to do analysis of NATGAS, gold, silver, crude oil and US cocoa. And NATGAS has shown some good conditions for the upcoming weeks or months, which I'm going to talk about in the analysis part. But I would say NATGAS and gold is the winner of the year so far. It's been 3 months in this year. I would say 4 months almost. March is about to over. We have taken 4 trades of NATGAS, big trades, 4 big trades of gold. All of them were the winner. But the NATGAS trades I've sent to the members and the gold trades I've clearly called in my YouTube videos. So we have made some insane money on those trades if you followed your conditions and rules. Now, I want to start with this pair, with this trade USD CHF that I've sent to the members and that played with my emotions and my patience. Now, how I manage these trades and how I informed my members to come out of these trades or manage these trades if they want to. Now, the way I do my risk management, I'm going to tell you that as well, how I take 2 trades and then I manage my trades. Now, this was the trade alert that was sent to the members right here when the condition forms, which is my bearish engulfing pattern. Right here, as you can see on your screen. Now, I've clearly mentioned to my members that it's going to be a risky trade when I've sent this alert that price also has a weekly support below right here, and I'm taking this trade but with the low risk. So the way I've entered this trade, I've entered with the 2 trades, 2 positions, one with a smaller target, one with a bigger target. So one surprise, hit my smaller target, I sometimes manage my trades or let it run to the bigger targets. Sometimes I open 2 trades, one with the bigger targets, one with the smaller targets, but I keep one stop loss, which is my bigger stop loss. So I have my bigger stop loss here, but the price immediately pushes up right here. Almost about to hit my stop loss. Got lots of panic, got some messages from the traders that, oh my, what to do? Is it going to hit your stop loss? I don't have the answer of that. I'm not sure what's going to happen because, of course, no one knows what's going to happen. But I know that I've taken this trade with a high probability chances of hitting take profit, but I'm also taking a risk into my consideration that we have a weekly level here. That is why I maximum want to manage this trade is to these level if the price pushes lower. So I have all these factors in my mind. As trading should be a business, not just a buy or sell game. You need to be very serious. You need to look at the markets all the time. That is why I sent notifications to my members, which I'm going to come to very shortly. When the price pushes up and then pushes back up, it forms another bearish engulfer right here. A bit of relief, but then it quickly pushes back up again. Now, it started to push lower. I have my eyes on this pair and I wanted to see the price to hit at least my take profit 1. Once that happens, I immediately sent a message to my members right here that TP1 has been hit. Now you can manage this trade as we have the major support right below. Then either you can come out of the first trade if your take profit 1 is hit, you made some money, or you can move your stop loss to break even and let your trade run risk free to take profit 2. So either way, if the price, let's say, pushes back up, whatever you have made in take profit 1 would be break even and you would be out in 0 loss, or your take profit 1 is in your pocket and then your take profit 2 will be right here if you want to stick with a fixed stop loss. Now in this case, the price pushes lower, hitting both targets. So that is what we call patience. Now with that, I've also informed my members to keep an eye on this area as this is a weekly level, which was also mentioned in the trade alert where I've sent to the members that keep an eye on these weekly levels. But some members who are my Priority Plus members, in my live session, I've mentioned that now keep an eye on these weekly level and keep an eye here on a possible formation of double bottom, which we had right here with a pin bar right here, a pin bar right here. Now, I was busy here. I couldn't see this trade, but at this candle right here, I've entered my trade. I could have entered right here, but I've entered right here. And as you can see, the price again hit my 1.4 to 1 reward to risk target. So how beautiful trading is if you follow the rules. First we enter the sell trade, both target has been hit, but it was all with the patience. If I was not patient enough and I just come out here, or maybe come out right here in a small profit, or maybe right here in a small profit, then I wouldn't be able to make money with the take profit 1, with the take profit 2, and then with the double bottom. So we sold, then we bought, and then we have taken profits on both sides, sell and buy. That is why it is very important to take your profits. And I always say, don't marry your trades. It's just a date. You need to know when to exit as well when you take your entries. So now the reason behind this trade, number 1, a downtrend here on USD CHF. First we had a condition which I took, which I've shown in my previous video. Take profit hit, price again made a new low, broke below the structure right here. As you can see, this was the structure formed. Then we had a pullback back to the structure. Not completely. That would be a good entry right here. But we had a bearish engulfer right here. Now, if you're a student, you know that if this entry wouldn't have been played out, you could have entered right here with a better reward to risk ratio with the full rules. For the students, you know the second chance entry, right? So that is a good example. But I was in already. Then the price from the bearish engulfer. And in a downtrend, I want to ride in a trend. Now, some traders say, if the market is at the lowest point, keep on buying. Now imagine that USD CHF is trading at the lowest point. The price is right here, for example. Now you say the price is almost oversold. Why not buy USD CHF? That is a mistake you do. Entering without a condition. You bought here in a hope the price is going to push up. You bought here in a hope the price is going to push up. And then you get liquidate right here and then the price pushes back up. You see, without a condition, all you did is taken the stress without a condition. Instead, what I did, I never fight with the trend. Instead, with the pullbacks, I sold. Again, with the pullback, with the condition, I sold. Then, I was prepared that the price is going to bounce up from here. I was also prepared that I'm going to buy from here if the price pushes here. Formed a condition. Now, when the price pushes lower, I did not buy here. Instead, I sold here with the pullback. Then the price come back and reject twice from the same area. Means the buyers are now interested to push the price higher. With that, we had an RSI divergence. So you see how nicely the market is talking to you with the divergence, with the double bottom, with the bullish pressure, pin bars. It is pushing higher. Now, clearly mentioned in my live session. First, let's see when I want my traders, my members, to keep an eye on a double bottom pattern, because I say everything what I personally do and everything is transparent the way I teach you. So let's see the clip and then we're going to come back to it. USD CHF was a painful trade. We are now at the weekly level. That is why I've sent you the notification that keep an eye on these levels. You see that is a weekly level. So now we might see a push up from USD CHF if there is a strong double bottom with a bullish engulfer or a pin bar. Amazing. So you see that how nicely both trades played out. Now, next, I want to show you one more pair. Euro USD. Now, these entries are not an alien for you. For the students, you know all 3 types of entries to enter double top patterns. First, we were already prepared, not this week, last week, that if the price comes to this zone, we're going to take sell trades. That has happened, as you can see the report in front of you that was sent to the members. Price came into my resistance zone, forms double top, and we sold. Nicely take the profit. Then we bought again right here with the bullish engulfer that was clearly sent as an alert. Right here, similar pattern formed on Euro USD, exact same pattern which we took on GBPCAD. That was a stop loss, but this was take profit. Right here, this played out. So we sold here, we bought here, made money here, made money here. Now after that, in a live session, the students asked me questions that what to expect now as the price is still inside the zone. First, they were looking at this bearish candle. I've said that it is not valid bearish engulfer. So wait for either double top or strong bearish engulfer, as this zone is still valid. Because if the price forms a condition at the upper level of the zone, I still go for it. So let's see the clip from the live session, then I'm going to talk about this trade. I've already taken my trade here. I'm not entering this trade because it didn't engulf the previous candle. Still, zone is still valid. It is still valid. If the price forms a solid bearish engulfer or double top, we can still go short. Perfect. So now I'll tell you the reason I've taken this trade. Very simple. The price pushes back up now. I get an opportunity to go to the market, every single pair with my members. I go through every single market, every single instrument, indices, whatever instrument you want to trade of your own choice. I do that. And with that, I also scan the market myself, which is good for me. Now, I've scanned this pair. Now, price was inside this zone again. And if you see here on 1 hour, if you follow me, if you are my student, you know I take my entries on 1 hour and 4 hours, especially with double tops. Now here, why I've entered this trade? I've entered 2 trades. I want to show you how I've entered 2 trades. And it is something you can learn as well if you are someone who want to learn chart patterns. First, the reason behind first top, and I've waited for the price to form a second top. Now with the second top, we have a rejection with the red candle, means sellers are now interested to push the price lower. Where I'm interested to sell this market with the highest probability. First, we had a first top. With that, we had a divergence in the RSI. Right here. That makes this trade even more stronger for me. So I've entered this trade right here, and with 1.4 to 1 reward to risk ratio, my target has been hit. Now, a shout out to my students if you're learning the double tops, double bottom patterns, and if you are in the advanced section of the course, it is something you will learn here if you have not reached there yet. With that, another entry pattern, which is what? When the price forms double top, it also formed a neckline right here. And then when the price broke below this neckline, I was waiting for the price to come inside this neckline, this pattern again, and form some sort of condition. And what is my condition? It is right here. For the students, you know what pattern is that. It forms a condition here, and absolutely I've taken this trade right here. Again, 1.4 to 1 reward to risk ratio target, and I've kept my stop loss above this termination zone with 1.4 to 1 reward to risk ratio target. So double top from the zone and break of structure of the termination zone with a pullback, with the rejection again. I've sold it again. Everything has happened with conditions, with my rules, the way I've teach my students with the full rules, and also discuss these entries in my YouTube videos. So how beautiful the price action is talking to you. No ifs, no buts. Now I've spotted one more trade, which is right here. That would be my entry as well. And if you have someone who have taken this trade, clearly a downtrend, right here was entry. 14 is the ATR, and I would have easily hit your take profit. Now, honestly, I've taken this trade, but I've not taken this trade. But for my students, you know, it is a valid entry. How beautiful trading is. How can you say you can't make money in trading when these entries are happening in front of you every day? Only thing you are missing is because you're not following your risk management. You are not in control of your emotion. You are fearful when you take your trades. You are scared when your first stop loss is hit. You are scared to enter the next trade because you fear that it might hit your stop loss. Yes, if it hit your stop loss again, you are fearful again to enter. But for me, I enter again and again. Doesn't matter what, looking at the good setups. I've shown you the probabilities, double top, divergence, rejection again, bearish engulfer again. So if the odds are in my favors, why I'm getting scared if I'm a stop loss there? Your account will never get wiped off if your stop loss is there. You get multiple opportunities in the market if your stop loss is there. Then I want to show you one losing trade as well, which is CAD-JPY. For me, that was a good entry, a bullish cross with a bullish engulfer, and that didn't play out. When I show you my profits, it is something I want to show you as well. The trade alert was sent to the members. That hit my stop loss. Totally fine. If that didn't play out, this trade played out right here. Exact same conditions. No need to get scared of. Now I want to show you one more trade here, USD Japanese yen. Now this trade I've taken personally. It was a very risky trade. I've not recommended my members to enter this trade because the price was above 50 and 20 EMA. It was pushing higher. But this zone was sent to the members. If you're someone who want to take a risk, you don't need to rely on me. But I've personally entered this trade. It was going in a loss. Right here I've entered. The zone was sent to you to look for the counter trades. If the price pulls back to the zone, and the price pushes back up here, forms a bearish engulfer, a nice entry condition, and that news candle, the interest rate news candle, has fueled my take profit. Sometimes I take a risk like that. If there's a major news event, I personally take it, but I don't recommend members by sending an alert. It's your own decision to do your risk management. My job is to send you these zones. Your job is to look at the conditions, ask me, learn from me, and take your entries, do your risk management. So I've personally taken this trade. That zone was sent to you, and that hit my 100 pips target easily. A risky trade because I knew that there was a major news that could have blasted up, hit my 100 pips stop loss. That is why it is very important to trade with a calculated risk. Then this week, one zone played out. We still are looking at the other zones for the commodities, for the forex, for indices. Not many pairs has reached to those levels. We are still waiting for that for the price to get to those levels, which I'm going to update you guys maybe next week. But this zone has played out nicely. So for GBPNZD, I've said that the price is going to get to this zone and we are looking for the buy trades only. For me, I was looking for the entry right here. On 4 hour, we didn't get an entry, but on 1 hour, we had a minor double bottom pattern right here. That nicely played out, hitting how many pips target? Easily. 1.4 to 1 is easily, but that pushed up 300 pips from my zone. Someone who's just my member, who's not my student, if you're just using my zones for your extra confidence, if you have your own strategy, then as you can see, my zones played out perfectly fine most of the time. And that certainly hit take profit if you have entered this trade. I personally not entered because I want to enter either with a double bottom or with a strong bullish engulf on 4 hour. So I missed this trade. I could have, but that is totally fine. Market is never empty. It's like an ocean which is never empty. Look for the next opportunity maybe next week. So don't get hopeless, don't get disheartened if you missed a trade, and don't revenge trade because of that. Instead, stay calm, relax your mind, because with a good mindset you can able to take good trades. Finally, this week I've sent zones to the members, commodity zones including copper, palladium and the other commodities, major soft and hard commodities. But out of that, NATGAS has played out a bit, but not an entry condition. For me, I've sent these zones to the members to expect a possible bounce from these levels. And as you can see, the price is bouncing up from this level and has bounced up from a level on capital.com and on NEMEX as well. On 1 hour, we have a kind of morning star pattern that pushed up around 105 points. Again, I've not taken this trade, but I want to show you the zone that has played out perfectly fine. Now, I'm going to do full analysis of NATGAS. We are getting some good patterns here in the analysis part, but I also want to show you the trade I've sent to the members, which is right here. Now, similarities. I've taken my profits right here because when the price hit 50 EMA right here, I've cut my profits. I've already warned you guys to take your profits, and that was easily how many pips? 170 points of take profit here on natural gas. So first, let me show you the trade alert I've sent to the members right here with the two targets. And I always say that I'll remove my SL for the first target and maintain my SL and TP for the second target, which I've did exactly. And price barely hit my stop loss and then pushes back down, hitting my take profit 1 and take profit 2. That is how I take my trades here on commodities, especially here on NATGAS. And with that, I've also emailed my members that if you want to cut your profits, it's totally up to you. Take it and you can close and manage your trades accordingly. So I've mentioned them as well because I had my eyes on NATGAS, and with that I had my eyes on USD CHF as well. So both trades I have informed my members to come out, and both trades was a painful trade, about to hit my stop loss here on USD CHF and about to hit my stop loss on NATGAS as well. Both did the same thing and both give us a good reward in the end. If you are patient enough, if you have set your stop loss correctly, then you have made money right here. And not only that, you can't say I have not mentioned this trade in my videos. I've clearly mentioned this trade in my videos that I'm entering this trade. That is my valid signal, and take profits 1 is smaller, take profit 2 is bigger. So let's see the clip from my last video where I mentioned this trade. Target 2 was right here, the SL was right here, barely hit my SL. Before I continue, if the price hit my take profit 1 here, I might exit or might manage my trades like this and let it run risk-free, or I exit my trade. Is totally up to me how I do my risk management according to my other trades. Now, on a high time frame, I also want to mention that price is approaching 50 EMA as well. That is why I said that I might exit my trade if it hit my take profit 1, little bit above 50 EMA. If you are someone who's still in this trade, make sure you look at 50 EMA on a daily and exit your trades right here, because we have a very likely chance the price will push up from 50 EMA again. Awesome. So you see everything is going as planned and as with conditions. No ifs, no buts, clear condition, price pushes down, and we have made some money right here with the pullback entry bearish. Exactly how we take the trades on the other pairs. My strategy is the same. It works with indices, forex, crypto, every single thing. Your job is to test them and make sure you are putting the best performing pair or commodity or instrument in your portfolio. That's totally your job. But my job is to teach you the strategies and the rules. So you see how nicely the zone played out, and on the way down we have managed to enter this trade as well, hitting the profit. So this week 2 trade alerts was sent, 1 hit stop loss, and this has given us some insane money. Few trades mentioned in my live session that also played out nicely, and few entries I've just shown you that also played out nicely. So in the end we had made some good money if you're disciplined enough and if you followed your rules. I'm also in touch with my members, with my students constantly to keep you guys informed with decisions. Sometimes you take a wrong trade, I tell you what to do and what not to do. So example of gold is right here, and NATGAS is right here as well, where one of my members and few students asked me what to do that if the price has broken above. I've not said that keep on buying. I've seen this condition right here. I've said that the price is likely going to fall from here at least to 50 EMA all the way from here. I was not giving you conditions, I was not giving you entries, but I was giving you the probability, the high chances what price is going to do. As you can see the screenshot where I've marked this level right here, the price is likely going to fall, and few other members and students get in touch with me. This is how I do your basic mentorship if you are in this plan or in this plan. But if you are my premium member, you get access to Discord group where you see multiple discussions. Right here, as you can see in front of you, where I also interact with my students, with my fellow traders to keep an eye on certain conditions and entries. We are active in the group and we talk about multiple entries in the group as well. So that comes with the premium plan with the full mentorship, and it is something you need to invest on yourself if you are really serious about trading. You are ready to lose all the big amount of money, but you're not ready to learn at least something. No, if not everything with this, but I guarantee you that you're going to get and learn tons of knowledge that will help you to become profitable trader. But according to me, it is a full-fledged course that will help you to become a pro trader from the basics to the advanced level. All the strategies which I personally know, that has given me some insane amount of results till date, and the strategies and the entries I talk about in my weekends video, everything is there for you to learn with the exact rules, without ifs, without buts, with the exact entry conditions, when to exit, when to enter, how to mark zones, how to do support and resistance, what is valid zone, what is weak zone, what is invalid zones, everything is there. What to do in the consolidation market, and different type of strategies if you want to do day trading as well, for the swing traders as well. So it's for you to learn if you are interested. If not, that's totally cool. Make sure you hit the like button, subscribe, so that we can learn from these weekends video and you get the daily content and the analysis and learn from my videos as well. So let's end with this note and let's do the detailed analysis of NATGAS, gold, silver, crude oil and US cocoa. Now I want to mention few conditions the NATGAS is forming. First, on a high time frame, I've been mentioning that we can get a possible bounce from 50 EMA, which we have got right here. We are getting a possible rejection from here. Now, listen to this video very carefully because it might be complex for someone who is a beginner, but I'll try to make it as easy as possible by giving you some conditions step by step. First, let's look at capital.com data right here. And before that, let me show you the trade I've sent to the members, and I've said that I'll be coming out of this trade if the price hit my 50 EMA. That is exactly what I've done, without ifs, without buts. Target 2 was right here. The SL was right here. Barely hit my SL. Before I continue, if the price hit my take profit 1, here I might exit or might manage my trades like this and let it run risk-free, or I exit my trade. Is totally up to me how I do my risk management according to my other trades. Now, on a high time frame, I also want to mention that price is approaching 50 EMA as well. That is why I said that I might exit my trade if it hit my take profit 1, little bit above 50 EMA. If you are someone who's still in this trade, make sure you look at 50 EMA on a daily and exit your trades right here, because you have a very likely chance the price will push up from 50 EMA again. It's perfect. So I've shown you the trade in the first part when my trade was running. This trade, my TP, that was sent to the member, and right here that was informed to my members to close or manage the trades. That price now hit 50 EMA, and that was clearly mentioned in my YouTube video as well. Now, we have few conditions to look at. Depends on different platforms. If I get an entry on one platform, for example, if I get an entry on capital.com, I go for it. If I get an entry on Oanda, I go for it. I look at these two platforms. I've not looked at entries on Nemix, but that is also working fine, exactly like the others. But these two platforms are my tested platforms. So, two conditions you can get. Now, someone who's looking at entries on a daily time frame, we have got a one red candle that is rejecting from 50 EMA. If you remember, I've said in my previous video that if the price won't hold on 20 EMA, it is likely to form a condition at 50 EMA. Previously, if you look here, price pushed up from 20 EMA after the breather, then pushed up from 20 EMA after the breather. Then it fails at 20 EMA right here, pushed up from the support and 50 EMA as well. Previously, it did the same thing right here. So it is now come back to 50 EMA. Now, if let's say the price opened below in gap, that will be good. If first candle opened below in gap, again, it will be good because in that case, it might become a valid bullish engulfer and it will engulf the previous candle with the whole body. The reason I'm saying that if the price opens below in gap is good because if the price opens above in gap, in that case it will become an invalid candle and it won't become an engulfing candle. If it opens below, little bit below the previous candle, if that pushes up, closes as an engulfing candle, in that case it engulfs the previous candle with the whole body. So that is one condition I want to see. We have a breather completed. Now all I want to see a bullish engulfing candle on a daily time frame. If we have something like this, it will be a buy signal. Again, listen to it very carefully. First condition is a bullish engulfer right here. Now I also want to point you out one pattern, which is my head and shoulder pattern bearish. Now this could be a signs of reversal here all the way from here, could be a deep pullback till here if there is no condition right here, right? So that is why I gave you the condition first. Now how you can identify if the pattern is forming. Now at this point on capital.com on a daily time frame, price is now forming a possible right shoulder. We have a left shoulder, we have a head, now we are getting a possible right shoulder. Now for the price to form a right shoulder, it must first come down, right? Hit this termination zone, which is right here. If you want to mark these on the charts exactly like mine, these numbers in blue. Hit my termination zone and it must then pushes back up. So in that case, we have a right shoulder here. Now this push up can be till here. The way you can identify the push up is marking the termination zone above right here. As you can see these numbers in blue. If the price pushes up and pushes up to these highs, this wick, in that case head and shoulder pattern will become invalid. In that case it will become more like a double top pattern, first top and second top. So for the price to form a valid head and shoulder pattern, it must not go above the body of this candle. It must reject from here with a bearish engulfer or a pin bar. That is all I want to see. But again, I want to see a hit of the zone first, this termination zone, then a push up. Now, the reason I've shown you the first bullish candle, an entry right here, if we have that, is because let's say if we have a bullish candle first after push down, let's say red and one more green candle, that will be an opportunity to buy and exit right here and then look for your sell trade. That is why I say take your profits as well. And if there is no condition here, no bearish engulf here, if the price pushes up, expect a retracement and then a push back up again, which I'm going to keep you guys informed every day. So very simple. First look for bullish candle. If that happens, we're going to buy on a daily. I'm going to come to a smaller time frame in a very short while. We're going to exit right here. Look for bearish signs here. Sold here. It will likely to push down. Now for the complete bearish conditions, bearish momentum. If the zone is broken, the lower level, which is 3.772, and the candle is closed, then the price will likely to fall right here. So for the price to turn completely bearish, it must break below this termination zone. Otherwise, I'm only short-term bearish the way I've just shown you. I've taken some trades on a smaller time frame, like 4 hours. We have 4 winning trades throughout the year, but every trade happens with conditions. So hope that is clear. But wait till the price forms a right shoulder. For that, price must push down, hit this termination zone. If the price won't hit the termination zone and just forms a bullish engulfer, it will just normally push up. Still take your profits. Now I want to show you one example where NATGAS tried to create head and shoulder pattern, but it fails. That is why I say conditions are very important. Now previously, if you look here, price pushes up, forms left shoulder, pushes down, forms the head, pushes down, rejects from here. Now for the price to form a right shoulder, it must hit this termination zone. And from this termination zone, it must form a bearish candle, right? So previously we were waiting for that. Now you see no bearish candle, no condition means no entry. So that is what I want you guys to look here as well on both time frames. Now I'm going to show you on a smaller time frame. Price pushes up, left shoulder, head, push up, and right shoulder right here. Now at this point, on a smaller time frame, that was an entry with a bearish engulfer. If you would have entered here, that is enough to take your profits, and all the way from here till here, that is 194 pips move. So that is how you take your trades on a daily and on 4 hour. So I want to give you this visual as well so that you can see how you can take your trades on a daily and on 4 hour with the exact condition. So hope that gives you a good chance. Similar pattern we are getting right here. So keep an eye on this pattern once the pattern is completed. So that is something on a high time frame. Keep an eye on these conditions. And if you are confused, rewind and rewatch this part of the video. Now I'm going to come down to 4 hour time frame. On 4 hour, same conditions. Pattern is forming here as well, but for the pattern to complete, it must come down here and then come to this rejection box right here. So hit this zone first. If we have a buy opportunity here with a bullish engulfer, we're going to buy. That is enough move from here to here. That is 3,600 points. What else do you need here? So with that, if the price rejects from here exactly like this, in that case, we're going to go short here. Short term only, exit right here. If broken below these lows, then the price confirms that it is going to fall to the next level. That is how I do my step-by-step trading, and I take my profits step-by-step with a good reward to risk ratio. We need to make money from the market, not just watch the numbers going up and down in the market. So that is what I'm looking at on a smaller time frame. On a smaller time frame, we are still bearish till this zone, till the price forms some sort of condition. Now if the price already hit the zone as well, I also want to point out one more condition. As the price hit the double bottom, hit the zone, the green zone, mark a little rejection box like this. So if the price, let's say, forms a bullish engulfer, that would be a strongest entry, or a 382 candle without a candle to close below these lows. That is something I'm talking about on 4 hour. You can look that on 1 hour as well. If that happens, that will become a minor double bottom and price will likely to give a bounce. That is enough to cut your profits. Come out. And let's say the price forms no condition here and it pushes lower, close below here. Then keep an eye on this zone. Right here, these numbers in blue. It can still forms a condition at the lower level. Something like this. Bullish engulfer. Then we're going to go long here or double bottom here. All we want to see signal either here or a signal either here. That is all and simply we are looking at. Once there is a signal, there is no ifs, there is no buts. I've shown you the multiple trades when I've sent an alert to the members. When I see the condition, I take it. For now, no condition. Short term, we are bearish. Expect some more retracement. Look for the condition here. If there is no condition, then look for the condition here. Now, if the price just retraces up again, I'm talking about on a smaller time frame, right here, rejects from 50 EMA, forms another bearish engulfer, I'm going to go short again exactly like this candle. If the price pushes up, forms a bearish engulfer, on Oanda I'm talking about, I'm going to go short again till I get a buy conditions. So that is all I'm looking at. The level below on Oanda is right here. You can mark these zones on your chart on all 3 platforms to look for your condition in case you're brand new on this channel. So keep an eye. I've explained you with the very simple details. Look for these conditions. I'll keep you guys informed anyways. So make sure you subscribe to this channel so that if the moves and condition forms, I will give you a call. I've given you this call. I've given you this call, these calls before the price even pushes up or down. So make sure you subscribe so that once there's a condition formed, I'll keep you guys informed as well. So these are the conditions now. I'll be personally and closely monitoring for my personal trades. Let's move here on gold. Now, like I mentioned in the first part of the video, the way I've informed the members, my students, to look for a possible rejection from 50 EMA, that has happened. Now, you see in the last video I've said that if the gold and silver ratio pushes up, turns bullish, it will likely to push the silver and gold lower. Exactly that has happened. If you don't know how to trade gold and silver with the gold and silver ratio, the video is in the playlist. Make sure you watch this video, that it will give you some good knowledge about how I do my analysis using the gold and silver ratio. The card is up there. Click on this card and it will take you directly to the video how you can look at the markets with the ratio of gold and silver. So the ratio is bullish again, and now approaches the level of resistance, which is right here. Now there is a chance the ratio will push lower or forms a double top. In that process, gold and silver might consolidate or range, and if the ratio here forms a double top, in that case the ratio will turn bearish and gold and silver will turn bullish and pushes back up. So that is why keep an eye on a possible pattern on ratio. For example, double top means gold and silver will likely to push up from here. So now coming here on gold first, there is no buy condition yet, but if the price, let's say, pushes down, forms a bullish engulfer above 50 MA, I'm gonna go long from here. Otherwise, if the price just normally push up from here, if you remember, I've said that mark your rejection zone here and look for the double tops. It is something I'm looking at. If the price pushes up, rejects from here without a candle to close above, in that case, we have a likely double top and we're gonna go short again from here, short term only. So that is all I'm looking at. I'm not buying gold unless and until it breaks above this high or forms a bullish engulfer above 50 EMA. All I want to see a likely push up to this first top. From here, I'm expecting rejection and then I'm going to sell gold. So that is what I'm looking at here on gold and on silver. 32.64 goes to 32.98. That is the level of trend continuation support, the level that has been previously tested multiple times, as you can see, as support right here, support resistance right here, support right here. So price is now currently inside of support zone. So we have a likely chance the price of silver will start to push up from here again, and in that process gold might push up to this double top and fall from here as well. So that is why I'm looking at gold and silver ratio as well, and that push up is strong enough to break above 50 and 20 EMA. The silver will likely to push up to the next level of major resistance from where we will sell silver, which is right here, these numbers in blue. So if the silver forms, let's say engulfers, double bottom here, that is your buy signal. If nothing, look for the pullback entry bearish. That is all I'm looking at till here. Look for your buy signal here and go long here from silver. So keep an eye. Expect a retracement here from gold and silver, looking at the ratio of gold and silver as well, as we're going to see a push down here and likely retracement from gold and silver towards the upside. And then we're going to decide the next move, which I'm going to keep you guys informed as well. So in a nutshell, I'm expecting a move like this and then a fall like this. If broken below 50 EMA, only then I'm going to sell gold. And if silver is broken below the zone, only then I'm going to sell silver completely. Next up, we have crude oil. Crude oil has just formed a bullish engulfing pattern. That is my valid entry. In that case, in that scenario, I enter right here. 1 ATR is $0.50 or 500 pips, which is right here. So that is my valid entry. Seriously, guys, crude oil is not really good with the pullback entries, but looking at the nice cross and a nice uptrend, it might plays out. So let's see how this goes. For the bigger target, you can manage to these highs, which is a level of minor resistance right here. For the smaller target is always 1 ATR. That's totally up to you how you want to manage your trade. So a buy signal here on crude oil, it is likely going to push up from here to the next level above, which is 70.12 goes to 71.18. Again, guys, take your trades on your own risk. Everything in this video and in my videos is just for the educational purpose. Nothing should be taken as any sort of trading advice. Finally, we have US cocoa. Now, US cocoa has two levels. One is a minor, which I'm not really paying attention to, which is right here. These numbers in blue. I'm only expecting a little bounce from this level. And as you can see, the price has formed a minor double bottom pattern. So looking at that, I'm now expecting some bounce, could be above 50 MA, then rejection is. So if you want to go for the quick scalp, here we have multiple rejection all the way from here and here. Then quick scalp is till 50 MA exit, and then the price of cocoa will likely to fall to the next level of support, which is right here. From here, we can expect a possible big reversal. So that is all I'm looking at. A bounce from cocoa, then a fall to this level. If the cocoa bounces strong enough to break above 50 MA, only then I'll be looking at the level above for the price to get to right here to these numbers in blue. So that is it for the long video. Hope you got a value out of that, and I hope you have learned something out of the first part of the video. My goal is to teach you trading with the absolute honesty so that you can at least avoid some mistake. If you're learning, if you're getting value, make sure you hit a like button from me. It really helps me in the YouTube algorithm. Hope you trade green, and I'll see you guys in the next video. Have an awesome weekend.